So in this section, we're going to talk about the importance of getting pre-approved. You'll hear about this all the time. Why do you need to get pre-approved? Well, a lender is going to figure out what type of loan is going to be best for you. And there are several types that we've talked about in a previous video. They're also going to suggest the maximum price of the homes that you should be looking at. They'll tell you about interest rates. They'll tell you about down payments, estimated taxes. These are all things that will complete the picture, all things that you should know in order to make an informed decision on the prices of homes you should be searching for. If you don't have a pre-approval, it's kind of like jumping out of a plane without a parachute. Now, I have seen many people working with agents that say, I don't want to get my pre-approval letter. I don't want to be obligated to a mortgage broker right now. Well, you're not going to be obligated. We'll talk about that later. But then they start to go on tours and they actually find something that they love. And there are 15 people at the open house and those people love it too. They already have pre-approval letters and you don't. That automatically puts you at the bottom of the barrel when offers come in because you don't have a pre-approval letter. Again, when you get your pre-approval letter or letters, you're not obligated to work with the lenders that gave you those. You're going to do some choosing before you decide. In order to get pre-approved, here are the things that you're going to need. You will need 30 days of pay records, 2 years of your W-2 forms, 2 years of tax returns, and 2 months of bank statements. In addition, you'll also need your driver's license. I mentioned in a previous video, there are 3 types of lenders: specific mortgage brokerage, a bank or credit union, or a large online lender. And again, I recommend that you apply to one of each of those because they all have different processes and rates. When you apply, it will take you about 15 to 30 minutes to each of them. And let me give you an overview of the application process. So 1, you'll have to complete the application. It's going to ask you things like, where do you work? How long have you worked there? What's your salary? Are there bonuses? Things like that. Then they'll do a credit pull. They're going to look at your credit score. It will impact your credit score by 0 to 5 points, by the way. Here's something to make sure that you know. If you have 3 different lenders pulling your score within a 45-day period, that only counts as 1 credit pull. So you're not going to keep getting dinged for every report that gets pulled. So then you'll have to send in the documents that I mentioned earlier, the pay records, the W-2s, tax returns, etc. And then you'll receive your quotes from the different lenders. It's going to include monthly costs, estimated closing costs, some rate estimates. And when you have all this information, you're going to want to compare the offers from the different loan officers. Each lender is going to give you a pre-approval letter, which will then put you ahead of others in the offer process that do not have a pre-approval letter. You can also ask each lender to give you a TBD estimate. It's actually an official document that every provider is legally required to provide within 3 days. But you can actually ask for it earlier if you'd like. In the notes section below, I've included a link from the Consumer Financial Protection Bureau that explains loan estimators. It's a really great resource, so I highly recommend you check that out. So now you have all of this information side by side. How do you decide on which lender to work with? I think it's a combination of costs plus your gut instincts that will give you the best option. For example, you might be given a hypothetical rate that's in the high 5s, but higher lender fees, compared to a rate that's in the 6s, but lower lender fees. So you'll want to think about that. More importantly, I think you also want to think about the service level you've received from your lender during the process. Did they get back to you right away? Are they good at explaining everything to you? Because this can be a little confusing. You'll want to think about those things in addition to the costs before deciding on your lender. Another important thing to talk about when it comes to a mortgage. Once you've been pre-approved, there are certain things that you should not do. So 1, you should not make major purchases like cars or furniture. I know you're going to be excited about getting your furniture, but it's got to wait. You should not open a new line of credit or credit card. Do not change or quit your job. Don't move large amounts of money in or out of accounts. And do not make late payments. Make sure that you're paying everything on time. Those are all things that will impact your process. So please pay attention to those items.